Very good morning to all of you. On behalf of Auditing and Assurance Standard Board of Institute of Chartered Accountant of India, I welcome you all in today's very important webinar as well as 96 CP program organized by AASB of ICAI this year. And today's topic of the session is external confirmations and subsequent events. Both these standards are very important, that is SA 505 and SA 560. In order to tackle these two very important standards on auditing, we are having with us our own chartered accountant from our own chartered accountant fraternity, very learned speaker, very respected CH Swami Ganeshan ji. So on behalf of WSP of ICI, I welcome you, sir, in this platform for this 96 CP program organized by WSP of ICI. And it is my proud privilege with all of you to share with you the brief profile of our respected speaker of today, CH Swami Ganeshan. Our Honorable Chairman Sir and Vice Chairman Sir has stuck up in the important meeting. That is why we are starting the proceedings of the today's webinar. Shri Chinnaswamy Ganeshan ji has started his practice as a chartered accountant in 1988. Chinnaswamy Ganeshan ji was in personal practice till 2005. He then served as a director in Lovelock and Lewis network firm of PwC for 6 years and as a partner of BSR and Company network firm of KPMG for 6 years in audit practice. He handled Indian and multinational clients in automotive, auto ancillary, IT, BPOs, KPOs, telecom, industrial markets, consumer markets, pharma, healthcare, transport, logistics, shipping management, BSRE, oil and gas, plantation, banking, financial services, and insurance sector. He was a lead partner for many Indian and multinational companies and carried out audits, advisory on international financial reporting, taxation, due diligence, and other assurance services. He is presently the senior partner and head of audit and assurance of Messrs. CN, GSN and Associates LLP, Chartered Accountants, Chennai, a firm with 11 partners and around 120 team members. Shri Ganeshan ji specializes in financial reporting, including Ind AS, IFRS, and US GAAP, company law matters, audit and taxation, and is a recipient of the Jewel of India Award for his role in financial services and Certificate of Excellence for his contribution in the field of financial services by the International Business Council. Shri Ganeshan ji has presented 1,250 plus papers of various seminars, workshops, and conferences both in India and abroad on these specialized subjects. He has assisted 80 plus companies on Ind AS, IFRS, and India transition. He has also authored a quick reference on IFRS with model question and answers, the revised Schedule 6, Ready Reckoner, Ind AS quick referencer, and Ready Reckoner for financial statement under Schedule 3 to the Companies Act 2013. Shri Ganeshan ji is closely associated with the Institute of Chartered Accountants of India for the last 20 years and a guest faculty for its 5 regional councils. He was a co-opted member of Accounting Standard Board, the apex body for the financial reporting standards in India and India's Transition Facilitation Group. He was also co-opted member of the India's Implementation Committee of ICAI and the Auditing and Assurance Standard Board of ICAI, the highest standard setting body of the auditing profession. Shri Ganeshan ji is also associated with many chambers of commerce like CII, FICCI, ASSOCHAM, universities like University of Madras, Annamala University, Loyola Institute of Business Administration, Madhuraj Kamra University, Vivekanand College, and staff in training colleges of RBIC and AB and other banks. He is presently the co-opted member of Executive Committee of Institute of Directors, Chennai, Board of Studies of the Department of Commerce of Shiv Nadar University, Board of Studies of the Department of Commerce of University of Madras, and Board of Studies of the Department of Commerce of the Tyagaraja College, Madurai. So list is still very vast. So once again, I welcome you, sir, on behalf of WSB of ICI. So without wasting much more time, I thanks to for acceding to our request on a very shorter notice and request you to please enlighten all of us with your words. Please, sir.
Thank you, Anil. Thank you, Anilji, and the WSP for giving this opportunity of sharing my thoughts on SA 505 external confirmations and SA 560 subsequent events, both having a very strong impact on how the audit procedures are being conducted and how it may have an impact on your audit opinion. So 505 and 506 comes under the evidence gathering process as part of the execution process of an audit, and based on which you will go into the reporting and conclusion aspect of your audit report. As far as SA 505 is concerned, we may be having a lot of views on how we have to do the external confirmation, whether it is really required, whether we are getting the external confirmations properly, and whether it substantiate the purpose for which it is being done, and how we can actually make use of that outcome in our audit opinion. We may have a lot of views on that. And sometimes when we are going through the slides, we may also have a feeling that maybe we are going back to the school once again for the purpose of understanding the way in which the regulators are looking at external confirmations and the process in which the auditors have collected the external confirmation for forming audit opinion. So that is the reason why in some cases, I may even take you basics to the external confirmation. And as far as the subsequent events are concerned, maybe this will occur in a very rare circumstances. Maybe I can say that it is not going to be having a repetition on a year-on-year basis, but sometimes it may happen. Even in my case, very recently, I had a situation where we cleared the financials on May 29th for a listed company, but because the company was having some other issues, the resolution professional has suggested that the accounts will be adopted on October. So we have postponed it to October. In October, before that, we have actually issued a draft opinion. From May to October, there are some events which has happened. How that has impacted my earlier opinion, I have to consider based on SA 560. And again, in that meeting, the board, audit committee has cleared, but the board has not cleared. And the board has actually posted it in the next week. So if there are events which is happening between the date of the audit committee and the date in which it is made available for the public by the board of directors, again, there is a subsequent event which we are supposed to do. So these are practical oriented standards which we have to necessarily consider in completing our attest function when it comes to an audit of any client, not necessarily listed client. For any client, we have to necessarily look into that. Having set the tone for this, let me just look at how the regulators have commented on the confirmation process in many of the cases. So you may have the feeling that confirmation is not a very great activity, which I have to do it, but how the regulators have commented when they have carried out a review process of the audit quality by going through the work papers of auditors of listed companies and how they came out, including FRRBA or NAFRA as the case may be, how they have come out with their observation, especially on the confirmation process. They believe that there are maximum irregularities built around the weak external confirmation process. When we say confirmation process, it's actually external confirmation process. They felt that there is a weak confirmation process. Because of that, many irregularities have been built around that particular area, which had direct impact on the way in which the auditor has concluded that audit opinion. So they believe that the external confirmation process requires a lot of improvement, and it should be a robust process is what the regulators are feeling. The second important observation, this is the reason why I thought that I will take you to the basics for external confirmation. Maybe you will feel that as an experienced chartered accountant, why should I go back to basics, or why should I go back to my school in doing my learning on the fundamentals of external confirmation? Mainly because even though we are claiming that we are an established firm of chartered accountants, we have a lot of varied clients from various walks of life and various fields of industry or service industry. But still, the regulators have felt that there are lapses in following the basic requirements of an external confirmation process. Basic requirement itself, they found that there are lapses. And they also said that when you are doing a confirmation process, the coverage which you are doing for the confirmation, maybe the selection of the parties to whom you wanted to send the confirmation, or the account balances which you wanted to cover, or the line item of the balance sheet and profit and loss account which may require a confirmation from a third party. The coverage lack is actually not in accordance with the expectations of the regulators or in accordance with the standards on auditing. There is lack of coverage is another comment which they brought in. And they are also saying that there was a robust process of selection. There is a robust process of coverage of various items. But unfortunately, the way in which it has been sent, received, subsequent evaluation of the confirmation responses received lack adequate supervision by the senior management of the audit team. Maybe the senior personnel in the audit team has not evaluated this properly. That supervision is also missing. These are all the basic comments which are coming from the regulator. And accordingly, it is becoming essential to look at what exactly is the requirement and what the way in which we can actually look at the process of the external confirmation. Let us look at this in a nutshell in various slides, which we are going to look at. First, how it helps the auditor. Why should I worry about the external confirmation? Can I simply say that my audit procedure gives me the comfort based on which I will conclude that a particular transaction or the account balance is actually existing, it is genuine, there is no fraud risk involved? Can I conclude on that? And how this external confirmation process will be helping me to get a better comfort other than what my audit procedures are. Mainly for two reasons. One is more pervasive audit evidence is required. Whenever I am assessing an area which is considered as high risk area. For example, when I am talking about revenue is a high risk area. When I'm talking about estimate, in some companies, estimate may be a high risk area. In respect of litigations, it may be high risk area. Compliance with the laws and regulations could be an high risk area. Or in those areas, when we are doing an audit, we may not be getting a strong evidence, conclusive evidence, or we are only getting some sort of persuasive evidence to conclude on the audit opinion. For that persuasive audit evidence, what is required is important, whether it is internal evidence or an external evidence. If an external evidence comes in, the value of the evidence or the comfort which the auditor can derive from that particular evidence is actually becoming high. That is the reason why we believe that the external confirmation helps in getting a persuasive evidence when the assessed risk is considered high in respect of the particular engagement on in particular processes, in particular balances, account balances, or the line items of the profit and loss. That's a fundamental issue. And in fact, when you are getting an external confirmation, it gives a direct evidence that what is recorded in your books of accounts or in the books of accounts of the client is 100% is correct. And to that extent, the substantive evidence which you will be collecting or substantive audit procedure which you will be conducting can be limited to a minimum. So that is the biggest advantage. For example, if I'm saying I'm looking for whether the sales made is genuine or not, whether the data is genuine data or not, where I'm considering revenue as one of the fraud risk assessed by fraud risk area in accordance with the SA 240, then if I get a confirmation for the major customers of the clients, which say, for example, they are contributing around 75% of the entire sales volume, then my procedure for validating the sales to the extent of 75% is confirmed, right? Only 25% is untested. My substantive audit procedure on those items can be done by means of a sampling technique or maybe some analytical procedure by which I can reduce my substantive work and it saves a lot of time. These are two important reasons. At the same time, the underlying principle is that when it comes to a case of a regulatory review, their concentration is on how external confirmation aligns with the financial statements and how the auditor has obtained, evaluated, and concluded in drafting his audit opinion, right? So this with these fundamentals, when we are looking at the SA 105 process of looking at how the external confirmation procedure can be very effectively applied and where it can be very effectively applied. Need not necessarily be in all areas, but some select areas where it can be very effectively applied. Let us look at those areas. First of all, the bank balances. This is one area we normally have a problem, whether the bank balance as per the books of accounts and bank balance as reflected in the case of the client in the banks are same, or there are some issues relating to that. So majority of the scams in which the cash and cash balances are not physically existing as on the date of reporting resulted in a case of big fraud issues where the auditor has been held responsible for negligence. The management has been drawn to courts for fraudulent financial reporting, etc., etc. So confirmation of bank balances is a very, very important area. And this area, normally all the auditors will do. Maybe the procedure which they are adopting requires a little bit of robust, which we will look at a later point of time. Similarly, when there are loans or advances on the asset side sitting in the balance sheet, you would like to see whether the funds or the parties are really taken the loans and advances from the company and it is not a bogus transaction or just by means of mere book entries. So the existence of this rights and obligations, etc., of the loans and advances which has been given can also be obtained by means of confirmation of balance. This is another thing which we normally do. Trade and other receivables, we circulate the confirmation to these customers and try to get that confirmation, reconcile the confirmation with the books of accounts, and then conclude that the trade and other receivables are properly stated. Nothing to worry about the existence of that particular item. Similar to that is inventory held by third parties. For example, if a company has a lot of subcontractors to whom the materials have been supplied by the company, and the subcontractors carry out job work and return the materials as finished goods, then in that case, there are two possibilities. One, on the date of reporting, there could be work in progress lying with the third parties, or raw material which has been sent to the third party for conversion is lying as raw material stock at the third party, and sometimes some finished goods which is yet to be dispatched back to the company could also be lying as inventory. Since the auditors normally consider participating in the inventory verification process at the client location, and in some of the major third parties, there always requires a confirmation of the stock lying with the third parties by the third party stockholders, maybe a consignment agent, or maybe the warehouse holder, or maybe the subcontractor has to give a confirmation. So in that scenario also, we took a lot of leverage on the external confirmation. Borrowings is another area of confirmation where it will be effectively applied. In fact, one slide where we will be discussing a little later with respect to borrowings and trade and other payables. This is on the liability side. In respect of bank balances, we normally look at what are all the bank balances or transactions which are appearing in the bank. We will not fill these numbers, the bank balances, borrowings, and trade payables. We normally don't fill the numbers, and we will just look for what is the balance as per the books of the other confirming party. And of course, trade payables, some companies are using the method of putting the numbers. Bank balances and borrowings, especially with the banks, we normally look for what are all the relationship they are having, and we are asking them to fill the details relating to current account balances, fixed deposit balances, the letter of credits, borrowings, term loans, working capital limits, guarantees given, etc., to ensure that what is reflected in the books of accounts is matching with what all the banking relationship which is existing. That's the reason why in one of the slides we will talk about whether to fill the balance outstanding in the confirmation of balances before it being circulated to the third party. Normally, bank balances and borrowing, we don't do that particular filling of the numbers. And another area where we may look for external confirmation is where the transactions are outside the normal scope of business. See, for example, one-time event is happening, and that one-time event is happening which is complex in nature. And this may have a significant impact on the financial performance of the company or statement of affairs of the company. It may require a third party to confirm certain understanding of the transactions. So, for example, if we are talking about a mergers and acquisition, or maybe it is a business combination or a slum sale, we may require a confirmation of the statement of account from the other party to get a clear understanding of the transactions happened and how it has been properly accounted in the books of account. Right. Similarly, related party relationship. Sometimes what happens is we may not be able to identify all the related party relationship. In that case, wherever we have any doubt or we have a reason to believe that a particular party with whom the transactions are happened, we also request them whether they have any relationship with the company so that the requirement of reporting under Ind AS 24 or AS 18 as the case may be will be fulfilled. This is another area of importance. Sometimes the company enters into an agreement with a third party, maybe a sale agreement, maybe a contract for supply of goods and services, and certain terms and conditions are not very clear. In that case, our understanding or what management is representing, if we wanted to have the clarity, we may even use the external confirmation with the other party with whom significant agreements or transactions have been entered into to understand the terms of these items. Wherever there are litigations or wherever there are legal opinions which are based on which the financial statements have been prepared and presented, we also look for the external legal counsel's view whether the outcome as assessed by the management is acceptable or there are any other views the external consultant or expert is having. That is another area of external confirmation. Sometimes the title deeds are held by the third parties. For example, if a company has taken working capital limits or maybe a term loan, they might have surrendered the title deeds of the immovable properties of the company with the third parties, maybe with the bankers or any other person who has given the loans. But we require a specific assertion that the title deeds of the company are held in the name of the company in respect of immovable properties, right? And CARO 2020 is also specifically requiring you to comment on whether the title deeds of immovable properties are held in the name of the company. If it is not held, what is the reason, what is the period, to whom, in whose name it is held, etc., etc. A lot of informations are required. So, first of all, when the title deeds are given as a security to a third party, we are not able to verify all these things. Whether the title deeds are really with the third party or this has been used for some other fraudulent transactions, which is not recorded in the books of accounts, normally we will require an external confirmation from the third party who is holding the title deeds on behalf of the company. And sometimes, even for the contingent liabilities, even for guarantees, we look for confirmation of balances from the third parties. If you look at this particular slide, you might have changed your view. Normally, we will circulate external confirmation for bank balances, trade receivable, trade payable. Now, there are other areas also where we are looking for external confirmation. That is the reason why I said that a robust external confirmation process will reduce a lot of your substantive procedure and give you a persuasive evidence where the assessed risk is at a very high level. Okay. So now we are moving on to the practical aspects of the confirmation process. How to select the items for confirmation. This is very important because a wrong selection may not give you the result which you are expecting or the comfort which you are expecting for the purposes of making your audit conclusion, or to do other audit procedure or design other audit procedure for the purpose of reaching the conclusion. So accordingly, let us look at this. The first and foremost of this selection process goes with one single aspect. What is the risk of material misstatement assessed by the auditor in his scoping procedures? If the auditors have identified the risk of material misstatement in respect of a particular process is considered low, he may rely on the confirmations which are available within the entity. He need not even go for a third-party confirmation. But if the assessed risk is medium or the assessed risk is considered high, then the auditor should necessarily think about selecting those items for confirmation. So risk of material misstatement is the first driver for the purpose of selecting a particular item for confirmation process. The second could be, sometimes when we were looking at the confirmation process, the auditors tend to have a feeling that the closing balance of the trade receivable or the closing balance of the trade payable, if it is low, we can ignore that. We will consider only the higher values. If the transactions are high due throughout the year, but they have been settled and very low balances lying in the year end, then the purpose for which the confirmation is being applied may not be helpful. So in those cases, the auditor should think about looking at the value of transaction throughout the year rather than just looking at the year-end balance. That could also help us to understand whether we have covered the major parties with whom the transactions are held, maybe purchase or sales, when it comes to trade receivable or trade payable confirmations. So value throughout the year may be required. What is the history of errors in that particular client's case? Suppose if the history of errors when we are saying in the preparation of the financial statements and in the presentation of the financial statement, client has given a financial statement and the auditor is carrying out his audit procedure, he has identified a lot of revisions required, maybe in the numbers, in the disclosure, in the presentation, etc. We call that as errors or exceptions as the case may be. What is the history of errors? In the last few years, based on your experience in the audit of that particular client, if the errors are very low, that means the client prepares something which is more or less equivalent to what is the final outcome. In that case, the auditors can think about having these items selected will be low, very, very minimal and not high number or higher volumes of numbers of items to be selected for. And another important point is I have so many debtors, I have so many creditors. I have given the entire list to my auditor. The auditor has selected the parties to be confirmed, and based on which circulation has also been done by my auditor. But the auditor is always complaining that the rate of confirmation received vis-a-vis what is sent is very, very negligible, or it is not reasonable, or it is very, very low. Then in that cases, sending confirmation to the parties again during the current period will also not going to give any major results. So based on the rate of confirmation received also, the auditor can decide whether to select an item for confirmation or not. The prior experience will always help the auditor to think about a particular item requires an external confirmation, or the auditor can be comfortable with the nature, timing, and extent of audit procedure he has already performed. Evidence from other audit procedure when the auditor has obtained gives a comfort that the balances in the financial statements are acceptable to his audit opinion, and there is nothing to worry about that particular item based on the other audit procedure performed. In that case, the item selected for confirmation can be low. But one important aspect above all these considerations, the one important aspect which we should always consider is apply professional skepticism, or ensure that your professional skepticism is always on throughout the period of your audit. So that is very important. Let's look at the process. Maybe to some extent, we are talking about this process as an elementary process, but at the same time, why I am talking about the elementary process is important is because the regulators have already told that the processes are not robust and there are fundamental weaknesses in the basic requirements. So let us look at the process on a quick basis. What are all the balances to be confirmed is to be selected. That's the first process. And these balances which are required to be confirmed, an appropriate format, which will give you the comfort that all the assertions which you are looking for example, the balance is outstanding, there is no difference because of that cutoff is ensured, there is no lien marked on those items, so rights and obligation is properly taken care, and these balances are based on the aging analysis given. When they are confirming also, you are able to do that. So with all these things, the appropriate format or the standardized format which you will use will be able to give you all these confirmation aspects so that your audit procedure can be taken care out of the confirmation received from the parties. So after you have had the standardized processes, normally the parties' addresses has to be checked. So, and the balances has to be matched with the financial statements. For this purpose, normally what we will do is, after we have selected the balances, we create a mail merge of the document for each of the parties and send that to the client to print it in his letterhead. And before that, we will ask him to confirm the correctness of the addresses which we have taken into consideration. Of course, the addresses are provided by the client, but again, we are getting a confirmation after I have selected that these are all the correct addresses. We will look into that, why we were insisting on checking the addresses before sending it again. And the balances also, whether it has been checked with the correctness as per the financial statement. Client confirms this, prints in its letterhead, and signs as an authorization to send that directly to the auditor. Who signs the confirmation request? The auditor cannot sign the confirmation request because the third party will say, it is a confidential information between me and my client, or how I can share to a third party. So in that particular scenario, the first paragraph of the confirmation process, as you know very clearly, the confirmation letter will say that addressed to so-and-so, as part of the audit process, please the balance as per our books of accounts as on so-and-so date is so much. Please confirm the correctness of this item to our auditor, so-and-so chartered accountant's address of the auditors directly. And in case if there are any differences, please attach a statement of account. And then for the particular client, the authorized signatory signs. Then only the balances, etc., will be part of it. And there will be one corporation area where it can be filled, signed by the client's authorized signatory and sent back to the auditor. So who signs the confirmation request is very important, because that makes the authenticity of the request made to the third party. Address to whom within the third party is also important. Sometimes we send this confirmation, for example, in a very big organization, if the confirmation is addressed to a generalized company name, it may not reach to the intended party. And accordingly, preferably to whom it is being sent, who is the authority who can issue the confirmation on behalf of the external party or confirming party, we will get the details and kind attention of so-and-so person. With that, it goes there. So that is also an important aspect. Control over sending and receiving confirmation is very, very interesting. We have seen cases where the auditor has selected properly, he used the appropriate formats, checked the addresses and balances, got the signature of the client, and the client has volunteered to send the confirmation on behalf of the audit team. because they have said that the audit team, so many confirmations you have to create your covers, etc., etc. Why you are bothered? We have a dispatch team. We will ask the dispatch team to send on behalf of you. When the team has given the confirmation to be sent to the dispatch team of the client, there always lies that the control over the sending process is compromised, because you don't know whether all these items have been sent, something is intentionally kept, or unintentionally, inadvertently it is not sent. All those processes are is actually impaired when you are losing the control over the sending process. That is the reason why it always says that get everything done, send it from your office under your direct control. Similarly, confirmation should be received directly by the auditors and not through the client. So when you have addressed the third party and you have addressed a self-addressed envelope to send it, if the third party is sending to the customer, your client, and the client is sharing with you, there is something seems to be unusual. So you have to look at what is the reason for that type of indirect confirmation is coming when direct confirmation has been circulated. So you should always have the control over directly sending it to the confirming party and receiving directly from the confirming party without any other persons from the client side involved in that particular activity. Now, some of the learnings from the past, why we are going back to the basics. What are the learnings which we had in the past? One of the question is whether to include the balances as per client's books for liabilities. Two problems which we have identified in respect of banking relationship. If we fill the numbers, we are filling only a specific term loan or working capital limit which is appearing in the books of accounts of the client, right? Sometimes there could be a possibility of other banking relationship exist which is not recorded in the books of accounts, but when you are filling the numbers and sending only a particular item, the bank will assume that this is what you are looking for. They will confirm that. On the contrary, if you are sending a confirmation of balance for a banker, asking him to list out what are all the current account balances, what are all the fixed deposit balances, what are all the borrowing relationship, what are all the items where letter of credit or any other contingent items like guarantees, etc., are outstanding. When we send this, what happens is that banker will confirm all the relationship with the bank is being covered. That's the reason why we learned from the past that whenever it comes to a liability, normally don't put the number in the confirmation. This is one. The second is interesting. One of the client said that do not put any numbers for the balance in respect of trade payable. Especially they have given a list of parties to whom they don't wanted to give the particular balance. When we said it's a scope limitation, then they have said that, sir, you can send for confirmation. Get a statement of account from that particular party, but don't say that this is the balance outstanding as per the books of accounts. The reason is very simple. There are some litigations which are going on. If I put the confirmation request with a number signed by the client, the other party can use that as an evidence for supporting his claims, etc. So the client doesn't want to have the liability number to be put into that. Both from the auditor's perspective and from the client's perspective, not putting the numbers in respect of liabilities is a better option. The second learning is whether the confirmation letter should be a positive confirmation or negative confirmation. What is positive confirmation? We send a confirmation saying that this is the balance as per the books of accounts as on so and so date. Please confirm the same. Whether it matches, whether it is correct according to the books of accounts maintained by you. If it is not correct, please attach a statement of account and the balance appearing as per your books of account. This is a positive confirmation. We are sending to everyone to confirm. Whether the balance is matching or not matching, they are going to give a confirmation. This is positive confirmation. There is a negative confirmation. In negative confirmation, what we do is we circularize to all the parties to confirm only if there is a variation. If no responses came in, we will assume that the balance as per the books of accounts are considered to be correct. Only if they are sending a negative confirmation saying that it's not matching, then only we will think about doing something on that. That is a negative confirmation. Again, when we will send positive confirmation, when we will give negative confirmation, a lot of guidance is available in SA 505. And one simple reason why we can think about a negative confirmation is voluminous parties. But the past history of the client is the risk of material misstatement is considered low and the response rate is very, very poor. The other audit procedure gave you sufficient appropriate audit evidences to conclude that the possibility of material misstatement is very low. In all these circumstances, even if the party is only sending a negative confirmation, you are all right. In all other circumstances, a positive confirmation may be required. Again, learning from the past. Whether to send as at the year end or at interim period. We have learned that sending for bank balances, whether it's a positive balances or borrowings, etc., it is appropriate to send it at the year end because you need a confirmation as at the year end for the purposes of your conclusion, also for the existence of the particular account balance, existence of the bank balances, etc. Whereas and roll forward procedure may not be proper for you to do that. Whereas in respect of the other parties, for example, trade receivable, trade payable, loans and advances, etc., you might have seen that if you are circulating only after 31st March and your audit has to be completed, say, for example, within 1 month or 1.5 months, like a listed company. In those circumstances, your confirmation process will happen somewhere in 15th of April, and you will be closing your audit by end of April or within end of May. The response from the third parties may be poor. For that purpose, we adopt a procedure called confirmation at the interim period. For example, if I'm doing the audit for March 31st, I will say, we will take the balance as of February. Send the confirmation. Ask the client, customers to confirm, the confirming party to confirm as of February. With that February number, we will see whether there is a reconciling items. And if there are reconciling items, whether it is arising out of timing differences or arising out of accounting adjustments required, we will pass all those things. And then we will roll forward this balance to the transaction happened between 1st of March to 31st of March and look at what is the balance as per the books of accounts of the client. If both are matching, then we will conclude that the evidences I have collected as of 28th of February or 29th of February, as the case may be, is comfortable with the roll forward procedure to confirm that the balance outstanding as on the reporting period is acceptable. So interim period or the year end, it depends upon what is the level of work which you are doing. Normally for your bigger clients, we do for interim period circulation for trade receivable and trade payable, do the roll forward procedures. For bank balances, for all clients, we will circulate only at the year end. Suppose if it is a smaller client, we will do everything at the year end because the client may not be ready at the interim period. So this again is a learning from the past and the experience which we have gained over a period of time. This is what I have said. Whether I can use the client's courier or I have to bring it to my office and send it from my office using my own courier. Always, if you are using client's courier, you are compromising the control over the process of sending the external confirmation. That is the reason why we should always send. Another interesting factor which we have seen from the past is we prepare only one, send it to the client, or we are sending 2 copies to the client. Client signs, gives back only one copy he retains. For a bigger client, it may be possible also. They wanted to retain which parties the auditor has sent the confirmation of balances. Whereas the auditor may not be retaining a copy of the confirmation sent. When the third party sends a confirmation, it may not be clear for the auditor whether this is what the auditor has actually sent and he is receiving it, unless there is a mechanism of verifying with the copy. That is the reason why we normally prepare 2 copies. If the client wants 1 copy, then 3 copies. One is retained in the file of the auditor, one is circulated to the third party, and 1 copy may be shared with the client. And we also maintain the proof of delivery for the simple reason, in case of external review, they are looking for whether the auditor has really sent for a confirmation or just keeping copies of confirmation sent. So the evidence of being sent, that or delivery proof, should also be available in the files. Another interesting factor which we have learned over the period of time is that we sent the request for confirmation to the confirming party at the year end. And in a bigger audit firm or smaller mid-size audit firm, or even for a smaller audit firm, when 4 or 5 clients' accounts have been selected and sent, what happens is that you are getting back directly from the confirming party, and you will not be able to see whether it is exactly for a particular client or not. That is the reason why we are saying it should be printed on the letterhead of the client, signed by them. You have to receive it and send through your courier. One aspect. Another aspect is, for the purpose of documentation, it is preferable that as soon as, because when sometimes the courier covers are coming in, it comes from a third party. But we will not know unless it be open from whom it has been received. And the moment it has been received, the office manager sends it to the particular audit team for their documentation. So in that particular scenario, which team has to receive this cannot be identified unless we open that. So to avoid that, what we normally do is we give a client ID and a particular serial number, so that each can be connected to which client and which is the team who is doing the particular audit will also be known to that. So the reference of the client ID in the confirmation sent, and also the envelope on which it has been requested to be returned to the auditor is also being maintained. There is also simple processes making things easier. There are scenarios where we don't get responses, or the letters of confirmation request has been returned as undelivered. So what is the procedure which we have to look at in that particular scenario? Every undelivered items has to be investigated by the auditor, especially for cases where it is returned no such addressee or incorrect addressee left, etc. When it is delivered, with the comment it has been returned to the auditor, the auditor has to be very, very careful whether there is any possibility of fraud connected with that particular external party. Maybe if it is a bogus party, the addressee may not be existent, it may be coming back. For example, in one of the client case where we have sent around 100 and 120 confirmations, 72 confirmations have been returned undelivered. We were worried because the address has been confirmed by the client, then only we have sent it. Control over the sending of the confirmation letter or with us, but the other party is identified as incorrect address, or party is left, etc., etc. We had a worry, and based on which we have extended our additional procedures for the purpose of checking the genuinity of the entire transaction for those particular parties, and identified that there were bogus sales accounted by the marketing team or commercial team, and the accounts team does not know that it's a bogus invoices which has been raised, and inadvertently they have shared the actual addresses which has been shared by the from their records. But when it is undelivered, we have identified that the sales transactions are not correctly recorded. They are bogus transactions, and fraud risk has to be further verified by means of additional procedure. So you have to always check the undelivered items. evidence from other procedures. In case if there is an undelivered item, I have verified whether there is a fraud risk. I have to actually see whether any other evidence has been obtained for the particular party. And based on the alternative procedure you have performed, you are comfortable that the balance is existing, then record that as the comfort auditor has derived. Otherwise, you have to be worried about talking to the client and then follow up with another confirmation request, get the confirmation, verify, evaluate, and then draw your conclusion. So that is another possibility. The next important possibility is, can I perform alternative procedure when there is no response from the parties, or there are a lot of items which are undelivered to the customer? Can I do an alternative procedure? For example, when I have trade receivable outstanding, some 10 cases has been not responded out of the selected item, and another 5 cases has been undelivered. What I will look for as an alternative procedure is whether these data have been properly collected in the subsequent period. If subsequently collected and remitted, I will also check whether the collection is actually coming from that particular party as in the past. It is not coming from some other party, and it's a case of teaming and leading of some other party's collection is being shown as a collection, etc. If I could do the alternative procedure, and based on which I can take comfort on the account balances, I can do that alternative procedure. And one area is, you require a persuasive evidence that the balance is existing or not existing. That is an important aspect. In that case, you cannot simply say that there is no non-response, there is no response, or the items have been undelivered. You have to follow up with another confirmation request, actually get that confirmation followed up and got that confirmation from the third party. If no confirmation is received with respect of persuasive evidence required, you may evaluate whether it requires any reference in your audit opinion as well. That's what we are saying. Determine the implication in the audit, whether it requires an additional procedure to be performed for fraud risk or any other risk to ensure that the risk of material misstatement is brought to the acceptably low level, or it will have an impact on the audit opinion. This is the way in which SA 505 says your non-responses and undelivered items should be evaluated. Let me take one example for you. Even though we have received certain confirmations, how we have to conclude on that? For example, in this case, there is a third party with whom job work has been given by the client. So there are inventories lying with the third party. So we are circularizing for the confirmation. The third party has actually confirmed the quantity of inventory available. What is the value of the inventory which is available? So the audit team has traced the inventory number, that's the inventory quantity, and also the valuation which has been done by the client, trace these numbers with the confirmation, and on that basis have concluded that the inventory balances are not materially misstated. Whether this confirmation process or the conclusion done based on the confirmation process is adequate. It looks as if whatever the auditor has requested for, it is fully received, and based on which the team has concluded. But only one problem here is the confirmation of balances can only talk about the quantity which is lying with the third party, because the third party is confirming the quantity. But the valuation, the auditor has to necessarily carry out based on information available, cost or market value, whichever is, or net realizable value, whichever is lower, the auditor has to do certain procedure. When the auditor has not done any procedure, but based on the quantity, number and valuation which is stated by the third party as well as the company, if they have concluded that the inventory valuation can be accepted, this is not the correct process. The confirmation is only confirming the correctness of the quantity available with the third party. Other than that, all other procedure relating to inventory should be done by us. We cannot say that I have relied on the valuation given by the third party. It may be intentionally overstated or understated. So we have to necessarily do additional procedures on that. Another case which we are taking, the client uses services of a portfolio manager to manage its investments. The funds with the portfolio manager is 10 million. At the year end, the portfolio manager has confirmed the following investments, various investments and number of units, cost of investments, market value, etc. he has given. And after that, he has also mentioned that out of 10 million, the balance amount available is 2,15,710 rupees. What the audit team has done, the team has traced the investments, 10,000 units, 65,676 units, etc., and the cost which has been recorded in the books of accounts, and based on which they have concluded that the investments are appropriately recorded. Now, the problem which I am looking for from SA 505 perspective is only confirmation which I can take it is from my portfolio manager in respect of the units purchased or sold on my behalf. There may be contracts which is available, but the party with whom the units are maintained, for example, it's a mutual fund. Mutual fund actually gives a confirmation of balances as of the year end. So that is what is required, because the portfolio manager is managing for you as well as for other people. There may be a fraud from the perspective of the portfolio manager. He is trying to give a wrong details of units and cost of investments and closing balances, whereas this might have been invested in some other's name also. So third-party evidence, as far as the portfolio manager, is only with respect to the purchases and sales made in the units, but it should be corroborated with the other evidences available from the units issuing authority or maybe the mutual fund. You have to verify that. Of course, the market balance can be verified from the NAV statement or the market quoted valuation. You can verify that number. So confirmation is one process, but it is also requiring the other audit procedure to be performed for the purposes of getting the conclusion. Let us look at another interesting factor. The client's response rate for data's confirmation for the past 3 years is 55%, 53%, 59%. When the auditor sends for confirmation, out of 100 confirmations, 55 confirmations are sent back to the parties, confirming the balance, maybe with the difference or without difference, etc. Assuming that in the current year, in scenario 1, we believe that we have seen that the response rate is only 40%. In scenario 2, the response rate in the current year is 80%. What is the engagement team has to do in this particular situation? Traditionally, it is around 55 to 60%. All of a sudden, it has come down to 40%, or all of a sudden, it has gone to 80%. It may have a possibility of indicators of fraud risk because the response is poor, not genuine parties are included, could be a possibility. The second scenario is 80% are confirming. So this is a client-induced confirmation which is coming in. Wherever we are sending the confirmation, the list is available with the client also. Client is ensuring that somewhere or other the confirmation has been received. For example, in one of the case, the biggest corporate scandal which we have seen in our recent past, the confirmation of balances received from the for fixed deposit is almost 100%. Original fixed deposit was available, confirmation is almost 100%. The moment you are getting almost 100% for every deposit when you are receiving from a particular bank, but in the past you have not received such type of balances or confirmation. So you might be a little careful. If they might have been careful, they might have identified that the client has planted somebody to send the confirmation of balances to the auditors. Sometimes very, very methodological or orchestrated fraud by the management, very difficult for the auditor to do it or check based on the established audit procedures alone. So very low or very high, you have to evaluate what is the reason behind that, whether it is an indicator of fraud. If so, what is the other audit procedure, whether I have to extend my audit procedure, all those things I have to look at. I take one more example. There is a 60% response rate to data confirmation. And according to the estimate of the engagement team, if 60% of the data are verified and it gives the comfort to them, balances are voluminous data, but independently they are constituting small numbers. No differences are noted on the entire 60% of the response. As an engagement manager, how you will react to the situation as an auditor, how you will react to the situation. All the confirmation I have received has been tallying with the books of accounts. Be happy. No, nothing is required to be done because books seems to be in order. I have sent 60. Not even one party is having a difference. So I'm concerned that whether the reliability of the entire data confirmation itself is my worry too much, or assess whether this seems realistic, understand the management process of reconciling the accounts, and then form an opinion. Maybe they are doing on a periodical reconciliation with the parties, and based on which they are passing the regular entries, and accordingly 60% comes with no differences at all. So when we are jumping to a conclusion, no happy, no bad situation, but we should always keep a professional skepticism on and keep our expertise and experience for the purposes of analyzing the real life scenario and the given situation, and then take a position on that. Okay, sometimes it may be genuine, or sometimes it may be an indicator of compromise on the data confirmation process as well. Okay, I have sent the external confirmation and I have received the confirmation back. How I have to evaluate? Have we received the letters directly or through email or through the client? Three possibilities. Direct confirmation, I am comfortable because I have controlled the sending process, receiving process. It is not confirmed through the letters, but it is through email ID. My worry is the authenticity of the person who is sending that email to me for confirming. For example, if it is being sent through a Gmail ID, anybody can create a Gmail ID and send it to me. If it is sent with the official ID of the client, going to the IP address, going back to the particular party to call and check whether he has really sent it, may be required as an additional procedure when an email is coming in. When direct confirmation is not available, email confirmation is not available. If it is received only through the client, because responses are poor, in that particular scenario, you have to also do additional audit procedure. You have to evaluate how the responses have come. Another interesting factor when we are evaluating the responses, this is what I have said. Sometimes I will take you to the fundamentals. Have you maintained the envelopes in which the confirmation of balance has been coming in? For example, it is a normal procedure that as soon as you open the letters, you throw the envelopes. Because the inside content is very important for you, the envelope is not important. That's the way in which normally people are thinking. What was happened in some of the review by the external reviewers or the regulators, the audit team has produced copies of confirmation of balances, but the reviewer has asked only one question. How we will know that this is actually received from the confirming party, or it is just printed, signed by somebody within your office and kept in the file? How we will know? How we will know that it's an external confirmation? In case of, if I have kept the postal envelopes, it has the date on which I have sent, the date on which it has been dispatched by the customer, and on which it was dispatched to me by the post office in my location. So all these evidences will be confirming that I have actually received an external confirmation and my reliability on them cannot be questioned. So the retaining envelopes, even though looks as a very, very basics, should be maintained. In fact, in one of the cases, the regulator very clearly said that since there is no envelope, they will not rely on the external confirmation process. There is no external evidence that you have circulated and got it. So they have denied that I will not be relying on this external confirmation. So it is very important, even though it's basics. Once I have received the confirmation, After opening the confirmation, have I compared that with the retained copies of my letters? I have sent some letters, one copy I have retained, one copy I have sent it, maybe the one copy which client has also taken from me. Whether the letter which has been sent is the same like what I'm receiving it, or something else is being confirmed by a third party. In that case, why that change is happening? What is the reason for changing that thing, confirmation letter? If that change indicates any possible fraudulent or fraud risk, I have to evaluate further. So that simple comparison with the existing retained copies, etc. Because in one case, the forensic team of the auditors have found out that these confirmation letters are fabricated letters. It is not original letters which has been sent by the auditors. So sometimes that may also be required to be simply checked on an overall basis, so that you will not requiring a forensic expert to be involved, or there is a requirement to use a forensic expert further on that. Suppose if it is done on an interim basis, whether roll forward test at the year end has been done and the result of the roll forward test shows that you can rely on the balances confirmed with the balance as per the financial statements. If the roll forward tests are not followed up, on what basis this confirmation will be having any relevance for the year-end financial statement? So you have to necessarily think of doing a roll forward test. Sometimes what happens is, despite repeated letters, banks have not confirmed. One of the alternative procedure which has been suggested is, you can ask the client, take the client with you, go to the bankers directly, get the confirmation letter signed by the particular authorized signatory, note down his names, etc., and then bring it to your office. This is also considered as an alternative procedure of getting an external confirmation. Only point which comes very clearly on this is staff number of the party who has signed, what is his name, whether he has an appropriate authority, his designation. If he confirm all these things or note down all these things in the confirmation letter or on the back of the confirmation letter, at a later point of time, we can defend on our case in case regulators are finding some errors on my confirmation processes. Electronic processes, I have said, when you are getting an email processes, validate the sender's identity, whether it is acceptable or not acceptable. Suppose if it is an indirect confirmation, have we performed additional procedures to resolve doubts over the appropriateness of the confirmation? Client has said, sir, the bankers have given confirmation to us, use this confirmation. Whether it is really a bank has given the confirmation or the client has created the confirmation. So we do alternative or additional procedure to rely on our confirmation received through an indirect source, not directly to us. So that is evaluating the response. When there is an exception, we have to investigate the exception, audit the reconciling items and document the reasons for the reconciling item, whether it's a timing difference or requires an adjustment. If it is an adjustment required, whether the corresponding entries have been passed in the financial statement. If entries are not passed, whether it is considered as not material adjustments required, and you have summary of unadjusted audit differences, getting a representation from the management that it is not material to the financial statement as per the external, the management representation representations standards on auditing. Whether you have identified any control weakness based on the exceptions, have you found out any fraud indicator? If you find out a control weakness, and if you're signing your internal control over financial reporting, then this control weakness has to be further evaluated whether it's a significant deficiency. If there is a significant deficiency or a material weakness, the auditor should consider changing or modifying his opinion on internal control over financial reporting. If it is a fraud risk, auditor has to perform all procedures required in accordance with the SA 240 to ensure that there is no material misstatement on this, as well as reporting on the possible fraud or assumed fraud or actual fraud which has happened based on section 143 subsection 12, whether any reporting on the fraud is required to the central government directly, etc. You have to evaluate. For that purpose, evaluating the exception is very, very critical. After having evaluated, whatever evaluation you have done should be properly documented and it should be properly reviewed by a senior personnel in the audit team, and the signing partner should also verify this for major account balances, right? So the robust documentation is very, very critical. Suppose if there is some possibility that the management refuses to send confirmation request. So we have to only check 3 items. We have to inquire the reason why they are not allowing us to send confirmation. Then we have to evaluate by not sending the confirmation, is it possible for us to address the risk of material misstatement or a fraud risk? And whether it is possible to perform alternative audit procedure to get comfort on the balances outstanding as per the books of accounts. And in case of non-response, whether it will result in a risk of material misstatement. If so, what is the impact on my audit opinion? So that's the way in which the auditor has to see. If it is when we are inquiring, maybe genuine reasons. For example, based on the litigation, they may say that don't send to the particular party. There is a litigation which is going on. Then you collect all the litigations and see that whether by sending a confirmation of balance to the other party, your client will be put into serious risk. Whereas for the audit purposes, you got the enough comfort. One possibility. Or the management refusal is nothing but a scope limitation. If it is a scope limitation, you have to evaluate as per say 700, 705 and 706, how you have to draft your audit opinion. What is the impact on the audit opinion? If you have evaluated that risk of material misstatement is not very big, you can perform your nature, timing and extent of audit will take care of that. There is no fraud risk. Then you can simply say that I can do a alternative audit procedure based on which this comfort has been derived. Robust documentation required in that scenario. If we conclude that it may be a risk of material misstatement either due to fraud or maybe by way of mistake, then you have to consider impact on your audit opinion that the manager refuses to do so. So this is on SA 505 external confirmation. Let us look at the other aspects of subsequent events. You know that subsequent event, I'm just making it very simple for your understanding. What is your subsequent event and what is the procedure to be performed? Because it's more of a theoretical process. Let us just evaluate for the next 10 minutes what meant as a subsequent event. What is the audit procedure which the auditor has to look at? The subsequent events covered by SA 560 slightly different from the subsequent event covered by means of accounting standards. Events occurring after the reporting period, etc. There is a standard, accounting standard. Slightly, there is a difference. Accordingly, I'm trying to divide this into 2 parts. Period 1 of subsequent event, period 2 of subsequent event. Period 1 of the subsequent event is equivalent to what accounting standard on events occurring after the reporting period, Ind AS 10 or whatever case may be, is taking care of that. Period 2 is only relating to standards on auditing. Let us look at what is period 1, what is period 2, what is covered by SA 560. Assuming that my reporting date is 31st March 2022. And I have issued the audit report, draft audit report on 25th of May 2022 to the audit committee. Let us assume that. This is considered as your period 1. That is the date of the balance sheet, period end, and the date on which audit report is issued. That is the subsequent subsequent event period 1. This is exactly in line with your accounting standard for events occurring after the balance sheet date or events occurring after the reporting period. So in those cases, whatever you do in accordance with the accounting standard, similar implication will be happening in your audit report. So very simple. From 25th May 2022, the audit report has been already issued, draft audit report is issued, but the management or the directors are approved it for public view only on 31st. So I have issued my audit opinion. And on 31st March, management has issued an audit opinion. And then this is called subsequent event period 2. Because after I have issued an audit opinion, the events occurring after that particular date, I will not be able to do any new audit procedure. If there are some significant event which has happened between 25th and 31st, and I am supposed to sign on 31st, assuming that I am signing on 31st, then in between period, I have to carry out additional audit procedures to ensure that it's being done, because it's an extended period of my audit report. Okay. When I have signed my audit report, but it is made available to the public only on 31st May, in that particular scenario, my control over the audit report is already over. If there are some events which has happened during that period, the auditor has to discuss with the management and evaluate whether any revision in the audited financial statement is required. If so, whether any additional audit procedure has to be performed. If so, the auditor has to revise this audit opinion. But auditor has the obligation to perform up to 25th of May all the subsequent event verification in accordance with the accounting standard. After I have signed, before it is released to the public, if anything has happened, I don't have an obligation to do any further audit procedure. But at the same time, the standard says both the periods are covered as subsequent events under SA 560 and gives a guidance what the auditor has to do in respect of subsequent event period number 1 and subsequent event period number 2. Right? Let us look at that. This is a simple process. Events requiring adjustment, event requiring only disclosure in respect of both whether sufficient appropriate audit evidence has been collected as respect to completeness, whether any additional audit procedure has to be performed. So you know that from the balance sheet date, that is year-end date, and the date of which I am signing the audit report, any events occurring, I should evaluate whether there is any evidence of adjustment required in the balance as per the balance sheet, or otherwise it is an indicative that the balance as given in the balance sheet is not correct. It requires an adjustment. We call that as an adjusting event. There may be some events which has happened that doesn't show that there is an indicator of change in the value of the balances as on 31st March. It is only an event subsequent to that. It has an impact only on that particular item. For example, on 31st March, I have a debtor balance. Subsequent to that, the debtor has gone for an insolvency process. Then collection is doubtful. So it indicates that the balance as of 31st March may not be correct, right? In that case, this is an adjusting requirement. My calculation of the expected credit loss as per Ind AS or my calculation of provision for doubtful debts as per AS has to be re-estimated or revisited, or I have to recheck the numbers for the possible adjustment. Whereas a fire occurred subsequent to 31st March and one factory is destroyed, it is as on 31st March, the property, plant, equipments are existing. Only subsequent to that date, they have been actually not in existence. In that particular scenario, we have to evaluate whether it is material to the financial statement for the subsequent year. If so, we have to disclose the events which has occurred, which is a non-adjusting event. Now we will understand this is nothing but what we have talked about in our accounting standard as well. Anyway, we have to collect appropriate audit evidence relating to completeness of the assessment, any other audit procedure and additionally which has to be done, we have to do that activity. This is the procedure on which you will normally look at how you can identify the subsequent events. And if there are any subsequent event, you will be doing it. For example, when I'm talking about the subsequent events, I normally look at how the management identifies a subsequent event. For example, a liability which has been not recorded. Unrecorded liability is also one of the subsequent events. So unrecorded liability testing, how the management is actually identifying the unrecorded liability and then doing that as part of the year-end process, making provisions, estimate, etc. How the management has identified this is one aspect. We also ask the management how the management is assessing the subsequent event. So whether they have come across any subsequent event. It is an inquiry. That inquiry will be corroborated with the minutes of the meeting, the other people whom the auditor may be meeting, maybe with the functional heads, etc. So corroborate that confirmation given by the management. And you may also check that if the management is issuing quarterly audit reports or quarterly audited financials or unaudited results or MIS on a month-on-month basis, whether any significant adjustment happened during that period, you review that interim financial reporting also, and based on which you can identify that item. And then you have to determine whether it's an adjusting event or only a disclosure event. And you should also give them, ask the management, that is especially those charged with governance, to give a written representation in accordance with SA 580. These are all the things by which you can identify the subsequent event. Now, after the audit opinion has been issued, that is between 25th of May to 31st of March. So if there are some facts which has been becoming known only after the audit report has been issued, the auditor has no obligation to perform any audit procedure after the date of the audit report. I have issued it. But my worry is these developments, whether they have any amendment in my auditor's report. I come across one very recent scenario where I think that I started explaining that in the initial opening remark itself. So based on that event, we have seen that the insolvency process which has been initiated by the IRP has been set aside by the appellate tribunal. The appeal made in the appellate tribunal is also not successful. The management has come out with an application under 12A of the IBC, which has been accepted by the Committee of Creditors, and the Committee of Creditors have agreed to withdraw the entire thing. If I do not know the thing which has happened after I have sent the initial draft report, and subsequently it has been postponed by nearly 4 or 5 months, a lot of developments which has happened, which makes my audit opinion requires a revision. In that case, I normally discuss with the management what are the new developments which may have an impact on the financial statement, which may have an impact on the audit opinion, and then based on which whether the financial statement requires an amendment. If there is an amendment, how the management intends to address this particular item by means of amendment or by not making an amendment. If they are not making an amendment, whether my audit opinion has to be revised. All those things are to be considered by the auditor in that particular scenario. If they are amending, I have to carry out the additional procedure and I have to give you a new audit opinion based on the amended financial statement. But the new audit opinion should be dated on the date on which the amended financial statements are not approved, but not to the original date. So the existing UDIN should be revoked. You have to create a new UDIN on the date of approval. Suppose if the management does not amend and the auditor report has not been provided to the entity, the auditor shall modify his opinion. If the auditor's report has already been sent to the audit management. So for example, 2 possibilities. There are events which has been identified, requires an amendment, management does not amend it. One possibility is I have not yet signed my audit report and issued to the client. In that case, I can amend my audit report to conclude whether any modification is required as per SA 705 for modification of the independent auditor's opinion, as the case may be. Suppose if I have already issued the audit opinion, but I believe that there is a modification required, I will notify the management that my audit report is no more valid, and accordingly it requires a revision and not to be circulated to the outside party. Then comes the problem. When I have done this, the situation is the audit report has been already issued, management has also circulated. Then only the facts were made known to the auditor. In that case, I cannot do any audit procedure. I have to only ask the management whether they are planning to amend this. If they are planning to amend this, I have to carry out additional audit procedure, and then based on which audit opinion has to be amended, I have to state that this audit opinion, the old audit opinion is no more valid. This is superseding the existing audit opinion. This is new audit opinion is being issued, right? Suppose if the, for example, even I am talking about this particular new audit opinion, maybe the amended audit opinion will be having an emphasis of matter paragraph or other matter paragraph relating to a particular note, why the amendment has been made, etc. I will do that. Now, suppose if the management is not amending that financial statement, I have to make the notification to the management or the parties, those charged with governance, that the auditor will seek to prevent the reliance on the audit report. I will say that it is no more valid. My audit opinion is no more relevant for the given situation, and accordingly do not place any reliance on the audit report. And I will ask the management to communicate to the users of the financial statements that the audit report is no more reliable. Suppose if the management or those charged with governance does not take the step of notifying the end users or the user of the financial statement that the audit report is no more reliable, then the auditor has to make a public advertisement or public notification at his own cost that this is not reliable. Of course, how you will collect it back from the client is totally different, but you have to ensure that you are notifying publicly that it is not reliable. So that is what you are supposed to do at that point of time. So there are two events. One is before you sign it, after you have signed it, and it is issued to the public. What is the two events? It's just very simple. Only the second one was a little different to us. So that brings me to the end of this session. If there are any questions, I will take the questions and I will give it back to the moderator to see whether there are any questions coming in from the audience. I will address those questions. Anil ji?
Yes, sir. Can you hear me, sir?
I'm able to hear. Is there any question?
Yes, sir. Yes, sir. Thank you so much, sir, for wonderful deliberation. I have certain questions.
Yes, sir.
Sir,
please.
sometimes the confirmation of inventory held with the third party may not be sufficient unless the reconciliation followed by the physical inventories at TP place is carried out.
Yes.
So, sir, kindly give your views, sir.
It's perfectly correct, because sometimes the third party confirmation, if the third party and the management are hand in hand, there is a possibility that the confirmation is not a correct confirmation. And accordingly, after receiving the confirmation, the auditor should always evaluate from the inventory records the confirmation which has been received from the third party and the reconciliation of the quantitative numbers based on what should have been with the third party. He has to actually do a further audit procedure to confirm that he can put the reliance on the third party's confirmation. So that is what the example which I have taken. Just relying on that is not enough. And further, on the valuation front, you cannot rely on the valuation given by the third party confirmation. You have to do, as an auditor, how the inventory balances have been valued, because confirmation is only for the existence of the inventory. One of the assertion on the financial statement. The other assertion is whether you have the right over the inventory. That also the third party says that on behalf of so-and-so client, we are keeping this inventory. It is not subjected to any lien. So the rights on the asset or control over the asset is also confirmed. But valuation is an independent exercise. It is not coming out of the third-party confirmation. We have to do our own audit procedure. That is the reason why we said it is not simply relying on the third-party confirmation. Some more additional audit procedure is also required to get the other assertions required for the purpose of concluding that this account balance passed all my audit objective.
Yes, yes. Sir, one member is asking, kindly put light on significant transactions outside the normal scope of business. Significant transaction outside the normal scope of business.
Yeah. One example is which I have shared is there is a acquisition of business, or there is a slump sale of one particular unit, or maybe there are, for example, I am in manufacturing activity. I am entering into a turnkey activity with a new customer. So it is not my normal course of business or the main activity for which the company has been established. I am doing something new in the current year. And if such type of activity which is happening, it may require a third-party confirmation also to understand the terms and conditions and how the management has understood and recorded is also the same way in which the other party has also done it. For example, Ind AS 115 requires your accounting for revenue is based on the contract with the customer. When I have a contract with the customer, I know what is the terms and conditions, so I can, revenue is my normal course of business. Something more than that, one particular land and buildings is sold, or one particular item has been reclassified from non-current asset to non-current asset held for sale, or I am planning for discontinuation of an operation where a third party is also involved. In those circumstances, it is not in the normal course of business. Your simple confirmation from one side may not be helpful. You should also look for the third party confirmation.
Yes, sir. Sir, if transaction 1 under GST and not filed till close of the financial year and filed before audit report, whether it can be included in the emphasis matter in the audit report?
Sorry, sir, come again.
If transaction 1 under GST Act not filed till close of the financial year and filed before audit report, whether it can be included in the emphasis matter in the audit report?
What is not filed before the date of audit report? What form?
Sir, it's a TRAN 1. TRAN 1,
Oh,
transaction 1.
Okay.
TRAN 1.
Okay. So you are talking about GST. So when we are talking about TRAN 1 or whatever GST related, and maybe input credit taken, not available, but subsequently it is available, etc. It is not available as of 31st March, but as on the date of audit, you are very clear on this. Then in that particular scenario, you can update that record because you know pretty well that you are eligible for that input credit, which was not available. So you can take that into that account, but only the important aspect is the reconciliation with the ECL and the closing balance as per the financial statement, including the subsequent event. When you are doing this, you should keep the reconciliation proper and document the validation of that particular reconciling items also. Then I think that you can take into consideration.
Sir, completed third-party confirmation should be received on the official email ID of the auditor?
When we are saying that third-party confirmation received through email, normally it will come through the official email ID of the particular party. So for example, if we are saying CEO or whatever name of that particular party at abc.com, ABC is the company's name, let us assume that. If that comes, to some extent, there is a validity which is available. But in the present day, in the digital scenario, we have seen that in many cases, even cybercrime is existing and anybody can simply play around with the identity of another entity, or they can create fake identity. That is the reason why it says when you are receiving from a Gmail ID or a Gmail is one example which I am talking about. So Yahoo may be there or any other email ID. Generic email ID when it is receiving, the standard always says that please consider that as not a direct confirmation from external confirmation from a third party. You will consider that as an indirect confirmation. Do all the additional audit procedure. This is one aspect because very lower level generic ID, I'm not very sure whether it is actually sent from the client's personnel or from somebody else. Suppose it bears the client's official.com, abc.com, and then it comes in, then to some extent I can identify the identity of the sender by checking the website of the confirming party, whether such a email ID is only authentical email ID, then any other name which they have created is also reliable. To some extent, I will standard says you can dial up to the particular party and check they have received an email ID, whether it has been sent by you. Can we take it as sent by you? So this is an additional procedure which the standard says to get a comfort on the correctness of this because of the possibility of somebody may misuse the email communication or email confirmation. So it requires a little bit of additional effort to be done. That's what we normally try to do.
Yes, yes, sir. Sir, some of the members are appreciating the presentation.
Thank
One
you.
member is saying, sir, you have well guided us about the creating standardized documentation formats. If you are kind enough to kindly share any source from where we can get an idea about the formats of standardized documentation, from where they can get this information.
Okay. One simple suggestion I can give is that two materials are available. One is the Standards on Auditing SA 505, where the application guidance as part of the standard gives you what are all the minimum documentation required. So it helps you to make a robust documentation. And there is also a material on external confirmation issued by the institute, WASD. If I'm not wrong, you can correct me, Anil. There is a publication which can also help you to do that documentation proper. And the third one, which I can actually suggest you, is that for a smaller entity, you can use it. Practitioner's Guide for Audit of Smaller Entity issued by WASP. That can also give you the robust guidance, robust documentation guidance, which you are looking for in respect of external confirmation as well as subsequent events.
Yes. Sir, last question. When we send the this through the email, is there any need to choose courier also, sir?
Sorry.
If we send any information or confirmation through email, is there any need to send it through courier also?
Normally, what happens is our circularization should be only through courier or any other post where you can physically send the document. Two problems which we have seen. In one case, the volume was so high and the client was not ready to bear the cost of postage, which in that scenario, the auditor has to bear the cost. Okay, you cannot get the reimbursement. Client was very particular. If you are able to bear that cost, it's fine. If the cost is preventing you from going for that, email confirmation may be used, but you have to do the additional procedure. The second one, which we have used in many cases, email confirmation is overseas confirmation, where the timing of sending, receiving the confirmation from the past was not very comfortable. We take the email confirmation from the foreign parties, foreign confirming parties, and take that as the basic confirmation, not conclusive evidence. Additional procedures to get the confirmation. So the first and foremost requirement is sent by post or by
Almost 3 hours 2 hours on this deliberation and on acceding to our request on a very shorter notice, sir. We have gained a lot through your deliberation, sir.
Thank you so much, Anil.
sir.
Thank you all the participants.
Thank you, sir.
Convey my regards to the chairman and vice chairman of the WASP.
Yes.
Because I was thinking that I will meet my friend who is the chairman of this committee. Maybe I will talk to him separately. Thank you so much
Yes.
for all the efforts taken.
Yes. Thank you, sir.
Thank you.
Thank you, sir. Thank you. Namaste.